The time is just gone 17 minutes past 9 a.m. as we continue with news and views this morning. And we still got quite a bit to come from now, right until 10 a.m. Now, yesterday we heard the Reserve Bank making the announcement, the increase in interest rates by 75 basis points. And clearly, there are a lot of concerns with regard to this latest interest rate hike. And there are concerns that this will bring about a recession in South Africa, considering where we are economically. We are in an economic mess, second to none. And joining us this morning is AIDC's Dr. Dick Forslund, who is a senior economist. Dr. Dick Forslund, good morning to you, sir, and welcome to the show.
Good morning to you too, sir, and good morning to your viewers.
Yes, some are saying that this interest rate hike was inevitable, considering what is actually playing out globally. But looking at South Africa at this point in time, can we afford another hike?
Well, already with the previous hike, we had this discussion that more people will be put into arrears on their loans when it comes to what they have borrowed money for paying for cars or their houses and so on. And then you have a whole lot of people, tens of thousands of people, hundreds of thousands of people who are using shopping carts or in clothing shops and so on. And all these interest rates will go up. And with this, the finance industry and the banks will enjoy this, but the ordinary people will not enjoy it. That's so much you can say. I mean, people will have to cut back on consumption if they will keep up with paying off on their loans, which will increase by 100, 200, 300, 400 rand per month, depending on how much indebted you are. So I think it's very bad news. And as you know, the economy shrunk already in the last quarter. And now, and also with the power cuts of Eskom and the mess at Eskom, there's no economic recovery. And I mean, the absurd situation is that in such a situation, traditionally, if you like, the central bank of countries would ease the pressure on lenders, on those who are indebted, in order to stimulate demand in the economy, or sort of to make the economy rise again. But our central bank is doing the opposite.
Well, it certainly is, because yesterday I spoke to another economist, and the view, Dr. Dick Forslund, was we are on a downward spiral as far as the economic situation is concerned. Everybody talks about growth, but everything at this point in time points to the fact that we are in negative territory.
Yes, that's true. And I mean, if you read the Reserve Bank's report, you will see also that they also speak, like all economists, that this inflation that we have, which by the way was lowered now from 7.8% year on year to 7.6 in the last consumer price inflation report. This inflation is not due to some kind of overheated economy, that the companies are investing more and more, or that the consumers are sort of increasing their consumption or something. It's imported. It's basically, this started with the hike on crude oil prices, on fuel prices, and that is nothing that you can deal with by increasing the interest rate. So I mean, what the Reserve Bank is doing really is to protect the value of the rand. So this was preceded by the Central Bank of the United States increasing their interest rates some days ago with 75 basic points. And then the South African Reserve Bank follows suit, and they do the same in order to compete for short-term inflows of money from money traders, basically, who would maybe drop South African bonds and investments if they can't get the as high profit as possible when they are lending out money, and this is kind of what is countered by the Reserve Bank. So it is also a structural phenomena in South African economy that it is because of the relaxation of the financial regulation for outflows of capital, and because it's so dominated by foreign capital, the economy. They kind of counter the outflows of the both illicit and licit outflows of dollars from the economy by luring in short-term inflows, and this has been going on for a while. And what shall you do about it? Well, and in the short term, you have to deal with illicit outflows, with all the profit shifting that big corporations is dealing with, because it is a part of the financial setup, so to speak, in these free market conditions. And the policy of the government and the Reserve Bank and the Treasury is to relax the financial regime over the financial industry, and then we have this situation. And you can understand from what I'm saying that I'm not in favor of this policy. You have to regulate strictly the financial markets and the financial industry, but the government believe in the opposite.
Well, it certainly appears so because, on the one hand, strengthening the value of the rand or even the US dollar, but the biggest winners here are going to be the banks and the finance industry.
Yeah, they will, and I mean, with this will also, as you might have heard, or sort of, you are one person who are following the news about this all the time. So the unions have for a long time been speaking about investment strike and pointed to the fact that corporations are hoarding. Well, right now the number is 1.4 billion rand on bank accounts, in financial investments, and so on. And if you increase the interest rate, then this incentivizes the corporations to keep on doing this, because they calculate that they can earn more money by keeping their money idle, so to speak, just earning the interest and not invest it in the economy. So yeah, this is also a part of the situation, the so-called investment strike, and the austerity policy of the government, which is further contracting the economy. And now we are bracing for the midterm budget policy statement, which will come at the end of October. So you have strict austerity, and you have a plan to reduce the public sector as a share of the whole economy, and you have a hawkish or extremely strict monetary policy of the Reserve Bank. And so with this policy, there's no hope in sight. Unemployment will increase. Small firms who are heavily indebted, some of them will go bankrupt, or they will sort of default on their loans. And I expect the unemployment to rise further. That's what I can say. So even without the load shedding, I would say that this is the wrong policy. But now we also have load shedding of Eskom, which further depresses the economy, of course.
Exactly. And also the point that he's made with regard to inflation, which is not being driven by domestic consumption, but rather
No, not at
by
all.
external factors. But looking at alternatives, are there any credible alternatives that the government should be exploring, as an alternative to interest rate hikes?
Yes, the first thing that comes to mind is of course stricter capital controls to stop the fast money flows in and out over the border. Stop the exchange, the fast exchange for rand for dollars, and then back from dollars to rand again. And that is one way to kind of calm down the situation, and you don't kind of like incentivize or lure money traders to come again for 1 week and then change again back to dollars the next week. You put in so-called speed bumps, and you regulate these flows, and you, for example, say, as was done at the financial crisis. I believe the country of Malaysia did that in 1999, 2000. They put in a regulation and said that if you bring in dollars to the central bank and shift it to our own currency and invest on the stock market, then you will have to wait 6 months before you take it back again. So I mean, that is one measure. But I mean, then you have all the situation with illicit outflows. And here the South African Revenue Service speaks about losing tax revenue of over 100 billion rand per year. And I mean, with a tax on profits of 27 now, 28% some year ago, this corresponds to illicit outflows of over 350 billion rand. And I mean, the mechanics of this is that you have rand, then you change it to dollar, and if the demand on rand is too low, then the price of the rand will go down in relation to the dollar. And as all oil and diesel and petrol is paid for in dollars, it will be more expensive for the South African economy and for those who import these goods to pay for oil and diesel. And then this reflects into the food prices. And then we have inflation. The third measure is in a situation where you have hunger in sections of the population, and when households are scrambling to buy food and necessary items, you should consider to have price controls on let's say the 20-25 most important foodstuff which households are consuming, because as I mentioned in another interview, if you look at the financial statements of the supermarkets like Pick n Pay, ShopRite, and Spar, you will see that they are handing out dividends as usual, even during the COVID crisis. So they are handing out dividends to the shareholders of 900 million, 1 billion, 1.2 billion per year. And a lot of this is going also to sort of cross the border and becomes dividend outflow from the country, and those outflows are not regulated. So with price controls on food to as one measure to curb inflation, of course the profit margins of the sellers of the big supermarkets will decrease, but that is a way of shifting the burden from the majority of the population to those who can afford it, so to speak. Who will not suffer from lower profit on the businesses that they are. Now we are instead killing the small businesses with this interest rate hike.
Well, Dr. Forslund, I must say, very, very interesting and fascinating talking to you as always, as you unpack and you unravel these developments and how this is actually impacting on the economy, the country, and the people at large. For that, we thank you and we do appreciate your time as always. All the best to you, sir.
Thank you.
Dr. Dick Forslund joining us this morning, AIDC Senior Economist, against the background of the interest rate hikes and its impact on South Africa, looking at the recession in particular amongst a number of issues. The time is just gone 9:31. We're going to go for a break. We come back, we'll be joined by SAMNET chairperson, Dr. Faisal Suleiman.